Hey guys, how's it going? This is Hala Pablo. Hey, in this short video, I want to show you how you could use fractal range analysis, real briefly, to momentum trade a crypto like Cardano. I have Cardano up here on the fractal range. I have this. The top one is on the daily, and the bottom chart is on the 1 hour. You can even go lower on the micro. This is the macro, this is the micro. Usually I have the micro on a forensic time frame, which is like 45 minutes or less. But today I put it on the 1 hour because of all the stuff I've marked this chart up with. I didn't want it to get too condensed and too muddled. So anyway, real quick with fractal range analysis. So this on the daily, we see that we have a bottom here. I drew a descending wedge from the price action. See how the price action formed a traditional Wyckoff distribution range with the selling climax here, the automatic rally where it's come up. The price action came up and then it got stopped out again. It came back down to retest support. The selling climax forms the support of the range. And then the automatic rally peaks out at the resistance and then retraces back to retest support. That's why it's called the secondary test. It's the second test. And so that forms the beginning of every trading range. And so you see from the selling climax to the automatic rally, the price action on the top has been a series of descending highs or lower highs. And then also on the bottom, on the support line, it's made a series of lower lows. And so, and then the price action has gotten narrow. That is the spread within the wedge formation here. So it's not a parallel channel, although we had a spring here. It's more like a wedge. So once we've identified and we have pattern recognition of this sort of thing, and it takes a while to play out. That's why patience is so important when you're trading, when you're investing, especially swing trading. Patience until you can properly identify the structure that you're interested in swinging. And in this case, you can see that we're swinging a descending wedge. So here, the price action, you can go ahead and do a Wolfe Wave on the wedge once it's played out past the secondary test and the sign of weakness here, which is 3. And so from this wedge, we can start assigning wave numbers for the Wolfe Wave. And you know, with Wolfe Wave theory, the 1 and the 4, if you draw a line from the 1 to the 4, and that's what this blue, kind of bluish turquoise looking elongated rectangle represents. And so at the end of it, where the 5 wave, finally the 5 wave gets to the confluence of the wedge and it marks up because it's a falling wedge, so they're bullish. Theoretically, where it's going to go all the way, the wave is going to go all the way up to meet the Wolfe Wave from the 1 to 4 that you've drawn out, and that's what it did here. You see, and as it met it right up at trading range resistance. This area here, remember, this is the same line as the automatic rally. It mitigated the automatic rally. That's really what that is, and that's what this dotted curved line represents. It represents the automatic rally and the mitigation on the Wolfe Wave. So this is all played out on the macro. It's all good. Now we want to know what's going to happen. See, the price has since retraced back to TRM, which is trading range midpoint, which is the 0.5 Fibonacci. That's what this is. Let me get a little brush so I can show you. This is the 0.5 Fibonacci. I draw it out in a yellow and a golden line here. It basically dissects support and resistance on the range. And here we currently sit. And now we could shift down to the micro fractal here, and all of this here is taking place on this top that sits between the 0.5 fib and trading range resistance. This whole area here is encompassed here. So now we want to focus on the forensic details, and we want to see, basically our prerogative is to see whether we're going to, if it's going to be able to hold, if this price is going to hold excuse me, midpoint? Are we retracing back to trading range support? Or are we going to have a rally to go ahead and retest TRR, trading range resistance? And if we are, then we can swing it if that's something that you wanted to do. Let's see, what kind of, that'd be a 24% swing. Not bad, right? Make 24%. But we need to see what it's going to do potentially. And the way we do that is through fractal analysis. We go down here. And so now we want to analyze this area here more in detail. It's like we're putting this area underneath the microscope. And this is what we see here. Okay, so we're looking at the cell walls now. And we see that we formed an upper wedge, a rising wedge. See a whole new, this would be the buying climax now on top. Here we had the selling climax. This is the buying climax. And so I put the buying climax here, and then we have the automatic rally. This is the inversion of this, basically. So the buying climax retraced back to trading range support. And we have a secondary test that now is on the resistance instead of support. You see on the selling climax, the secondary test retest support. On buying climaxes, the secondary test retest resistance. So then this forms a rising wedge, which is an inversion of the lower wedge. So we have, instead of lower highs, we have a series of rising highs, and then instead of lower lows, we have a series of rising lows. And so we could draw a Wolfe wave from it, which I did. Here's the 1 and here's the 4, just like here. Remember, this is the inversion. And this is already played out. It's retraced here from the 5. And we saw it bottomed out pretty much right where the Wolfe wave met. And see, it converged at trading range support. And that's where the price fell to, whereas here is trading range resistance. And it merged with the Wolfe wave. Here the Wolfe wave's merging on support. Here it merges on resistance. Okay, and so that's all good. That's all played out, just like on this. It's played out. It's, we can't make any money off it because it's already transpired, but it is very, very important for us if we want to build a case on the future momentum of price action, so we can take advantage of it now. And so we're looking now to see, since it's come up since then to trading range midpoint, where it sits now here. This is here now. And you see that this blue line here, I've anchored to the buying climax. This is the anchored VWAP. This is the anchored VWAP. And I use the anchored VWAP as a sort of a ice or creek barrier in Wyckoff. And it's just it's a loosely drawn resistance line over the tops. What I do is I anchor it to the highest point, which would be the buying climax. Actually, this went up higher, but I like to have more of a width to it, more of a history that I could track the volume on instead of just anchoring it to some up thrust or whatever. I go all the way back to the buying climax, and we could have anchored it here to the selling climax as well, and we would have seen it break. The price action breakthrough somewhere probably around here with volume confirmation. And that would have given us an idea. That would have given us a predilection of a bullish bias at that point, since the price action rose through the anchored VWAP with volume confirmation. But on here, we do it from the buying climax. And what I want to see here now, we see we formed another wedge. And so we could get a Wolfe wave going on this wedge. We're getting closer and closer to where we currently are on the forensic, where the rubber meets the road. We're going into unknown territory now. So we have a descending wedge. We know that descending wedges like this one are ultimately bullish. So we can go ahead and enumerate the bounces within the Wolfe wave that the Elliott waves are making. So we have the 1, the 2, the 3, the 4, and the 5. And whereas this one was a narrowing descending wedge, this is a widening descending wedge. Widening descending wedges are bullish. And so we see the 1, the 2, the 3, the 4, and the 5, and we've drawn the Wolfe wave from the 1 through the 4, just like we did on these past two examples. And we see that if this 5 wave now is able to prevail this micro trend resistance on this wedge here. The top is the micro trend resistance. If it can break through this area here, then we can reasonably expect the price to make its way up to the Wolfe Wave. And if it does make its way to the Wolfe Wave, then we can also reasonably expect it to mitigate this area here, which sits upon the 0.5 Fibonacci. So it's very, very important that if you're wanting to swing Cardano and make a little bit of money here, that we monitor the price action of where the 5 wave is and where it sits presently at microtrend resistance. And this is where volume spread analysis comes in. Because without volume spread analysis, we don't really know the buying power or the sell power behind it. It's like seeing like an airplane or a boat or a rocket ship or something like that. The volume is like the gas. It's like the fuel that propels it. And so sometimes it just moves on inertia, and then other times there's another force behind it, which is volume. But you got to be careful with volume, because you can also have anomalies with volume. You can have a lot of volume and the price won't move, which means something else altogether. And you could have zero volume at all, and the price is just rocketing through stuff. And that's also an anomaly. That's not right at all. Usually those are signs of the opposite bias. It's a sign of weakness. But right now, we don't really have a lot of volume on either side, the bear power or the bull power, but we do have this 5 wave that's risen from the microtrend support to the microtrend resistance within the breadth of this descending wedge. So we saw it came through this, like we could make this a selling climax, and then here's an automatic rally secondary test where we didn't go below the TRM, the trading range midpoint of this range, and we came up through here, rallied through, made a new high, hit here. Now we could look at the volume and kind of get a better idea of, okay, so this is above average demand volume, and it stopped out at it took it all the way up to the microtrend resistance, and then here we have, as it sits on microtrend resistance, we have supply decreasing. Do you see how this is? See how this area here is decreasing, and then demand. See these little demand bars here? How it's increasing. It's increasing, even though we've had this little pullback here in price action. So it's definitely not showing signs of weakness at microtrend resistance. It's actually showing pretty optimistic price action as far if you're wanting to go long here in anticipation of maybe possibly hitting this Wolfe Wave at some point. If it breaks through, if it's able to break through the governance of this wedge, then yeah, we could see it going all the way up and hitting this Wolfe Wave. And if it hits the Wolfe Wave, then it may not be very far at all from just mitigating TRM, trading range midpoint. Price action loves to hit midpoint. It's just magnetized to the 0.5 Fibonacci, whether going up or whether going down. And we see that the anchored VWAP is merged practically with TRM. So this is a very, very enticing juncture for price action. I'm not saying it's going to go through it, because that's a pretty tough barrier to cross if you have TRM merged with the anchored VWAP. But it also serves as a strong magnet to attract it to that. So that's something to look at. If we could prevail through here, if we start seeing, if it takes another stab at the microtrend resistance, and we start seeing building demand volume, then that would be a strong signal to maybe consider going long, scaling into a position, and putting your guns on these two targets here. Maybe taking profit when we hit the Wolfe Wave, and then selling at the 0.5 Fibonacci, or scaling out altogether, at least 3/4 of your position. So anyway, that's just an idea of how you could use fractal range analysis to profit from momentum swing trades and such in the markets. Okay, so this is ADA, this is Cardano, And yeah, I hope you enjoyed this. If you got anything out of this this technical analysis kind of thing, I appreciate thumbs up, like, subscription, and that way you won't miss more updates. I have Bitcoin coming out soon. I have another update on Bitcoin, Ethereum, Solana, and there's a few others. You know, they'll come out one by one as I have time to make these, but make sure you don't miss the updates. And so, all right, guys, no matter what your bias is, bull or bear, I wish you luck, safe trading, strong hands. We'll talk to you soon. Have a great Sunday. We'll see you later. All right, I'm out of here. Bye.